Hey, this is Matt from InvestiQuant. Today is Tuesday, June 1st, 2021. Today is the first trading day of the month, and we saw sizable up gaps at the open this morning. However, those up gaps quickly turned into selling pressure right after the open, and we have been trending lower the majority of the day and the majority of these instruments here. So if you look at this top left chart, that is the S&P. You can see we opened up here near the highs of the session, and we were very weak right from the get-go, and we actually have outside days forming in a couple of these instruments relative to the price action that took place on Friday. So you can see our high is above Friday's high, which is right here, and our low is below Friday's low. So outside days forming on this first trading day of the month. Let's go ahead and hop into Discover and see what that type of price action has led to as we approach the close here. So I've selected all four instruments. We do not have the same pattern taking place in all the instruments. Currently, it is taking place in the S&P and the NASDAQ. It is not quite set up in the Dow and the Russell. We do still have some time left, but who knows if that would actually happen or not. But we're going to be using a time-based entry that gets long at 3 p.m. Eastern Time, exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, this morning we had sizable up gaps, but because this is going to be a rare scenario when you get an outside day on the first trading day of the month, I'm not going to be so specific about the opening location. I'm just going to say that we gapped up. So I'm going to hit gap up here in the gap direction category of the opening filters library. Next, I'm going to go to the post-open filters library. This is where I can add some context around the price action that we have seen so far in the trading session. So this is where I'm going to say that we have a red daily candlestick forming. We're trading below the open. So to do that, I'm going to come here and say that the intraday close is below the open. The intraday close is going to be referring to the price at the time of entry, which is 3 p.m. Eastern for this study. Next, I'm going to say that the low of today is below the prior session low. So I'm going to do that by going to where is the intraday low versus daily levels. I'm going to hit equals next to below prior low. And then lastly, I'm going to go to the intraday high versus daily levels. And I'm going to say that the intraday high is greater than the prior session high. So that forms that outside down pattern where you have a higher daily high, a lower daily low, and you are trading below the open, making a red daily candlestick. And then lastly, in the calendar section, I'm going to say this is taking place specifically on the first trading day of the month. So I'm going to grab that from the active today section. It is in our unique days category. And now I can hit view results. And here we go. These are the results based upon entering the market long at 3 p.m. Eastern Time and exiting at the close, which is 4:15 p.m. Eastern Time. When you gap up on the first trading day of the month, and then at 3 p.m. Eastern Time, you have a red outside day forming. So it's got a higher daily high, a lower daily low, and you're trading below the open. Historically, only 11 samples in the S&P dating back to 2003, so extremely rare here. Just for reference, the gap ups in the S&P have 140 samples historically. So we're looking at the price action after a gap up on the first trading day of the month, and that takes that 140 down to 11 when we look at sample sizes. So that should tell you about how rare it is. If we go to the NASDAQ, 15 samples, the Dow, 13 samples, and the Russell, 14 samples. So not a whole lot of samples to look at here, but we're going to look at them anyway. And the win rate on these S&Ps is 45%, so pretty neutral there on the few samples we have. Same with NASDAQ, 53% there have closed above that 3 p.m. price. So no real bias in either direction historically based on those two win rates. The Dow and the Russell have been a little bit stronger historically speaking going into the close with this pattern. Not sure that those will be true at the time of entry here at 3 p.m. They were not quite set up yet. So looking at the S&P and the NASDAQ win rates on these, very neutral. If we look at the average win and average loss on them, looks like the average win is a little bit larger than the average loss for the S&P. That's not the case for the NASDAQ. NASDAQ has a larger average loss. And then the Dow and the Russell have larger average wins here compared to the average losses. So the S&P, Dow, and Russell, this pattern has favored bigger moves to the upside. The win rates on them are a bit mixed overall, though, with the S&P and the NASDAQ both being very neutral and the Dow and the Russell being a little bit stronger. So hopefully you found that helpful. Good luck today, and we will see you next time.